Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind that there's risk involved with each trade that you take. You should make sure you manage your risk in a way that makes sense for you, and we'll go over some ideas in that regard if we find some trades to simulate. What's nice is our order window within our web trader and app make the risk management side of things pretty simple as it calculates your exposures for you before you ever place the trade. Also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our web trader platform by logging in the upper right-hand corner here, which allows you to trade with all the extra tools, free signals, market news, etc. On both MT4 and MT5 accounts from one location. And the same is true with our app. Now, as we log in then, there in the upper right corner, we'll find ourselves in the web trader. And, you know, there's quite a bit going on fundamentally, so it's a good time to be trading off of fundamentals. There's some really strong trends that were created yesterday with the tariff announcement from the Trump administration, and seems to be continuing today with movements that look quite predictable. I'll give you an example. We could go to the DAX 40, and what we see is pretty interesting. Let me just get rid of some of these old lines. We've been breaking quite a number of support and resistance levels with all the volatility, so the technical trading has been very nice. And when you back it with the fundamental news, it almost becomes a self-fulfilling prophecy sometimes with the movements that you're expecting. So let's go maybe 4-hour candles, get a little bigger view. And what we can see then is if we draw some price lines, okay, this was yesterday into today, and really this week leading up to the tariff announcement. We knew that was coming. And so what we see is a support level up here that was holding. And with the fundamental news and the fear about tariffs this week, what we see is a break of this support level that was established last week, and that becoming resistance. So an easy fundamental news backed up by technicals as well would be that, okay, there's fear about tariffs. The tariffs can be thrown on the EU. We're talking 25% was promised by the Trump administration. So to trust this broken support to act as resistance now, the story about tariffs is what broke the support level. That's the fundamental news that broke it. That's what's keeping it below here. And so then fundamentally and technically, it made sense to put your stop loss above that broken support level, which is acting as resistance now, and to short this market with the fears about tariffs. And so what we saw was a crash down and then a predictable, at least temporary bounce from a well-established support level from the past. Okay, right in the same price zone, we saw support and back up. Okay, and so as this came down, we found support and back up. Okay, but predictably, this movement was not able to break back above this resistance level here. It actually never reached it. And so once it gave you the opportunity from this location again, with the tariff news still sitting there, again, it made sense potentially to trust this resistance level, put your stop loss above there and short the DAX, knowing that those 25% tariffs were still coming. Okay. Then we see the crash down with the news. We see a temporary bounce back up and a further crash down as those tariffs were actually implemented. Okay, and then we see a temporary bounce back up again to the new resistance level. Again, this was support, temporary bounce. With the big news, it breaks that support. Did the news change? No. So trading with the fundamentals tells you broken support level because of, in this case, bad news for the European Union, which still exists. So when this bounced back up today to that broken support level, which is a resistance level now. Since the news has not changed fundamentally, then you trade in the direction of the fundamental news with the resistance level in your favor to put the stop loss back above. So a temporary break above, it just broke below a couple hours ago and down with the momentum again. All of this fundamentally driven, and you can use the technicals for your exit points for stop loss and take profit. Okay, so let's then go to smaller candles to look at just today. Okay, so here's the most recent move down with the open today, and then a pull back up, and here's a move down. So what we're looking at is, here's that support level right here. We just broke below that support level just now. Okay, we just broke below it. So what we're looking at is, if you're going to short this with the fundamental news, now wait a minute, now we jumped off the chart that I was on. No, we're on the right chart, DAX, okay? But for some reason, when I click buy, it's up here on the initial one. So let's get the buy and sell buttons to be the same as the chart. Our chart is good, and now our buttons, we can get corrected. Little glitch, I think, here. Here, let's do this. Let's bring it up here. Because this looks like a momentum that's happening right now with the fundamental news. Now we'll be on the right buy sell button. Same chart, you can see, same lines we drew. But now the order window will reflect the correct instrument. Okay, so if we were going to short this, okay, stop loss above this broken support that just broke literally an hour ago. 22,203, so stop loss could be 22,210, let's say, back above this broken support. You would have to have enough momentum to go back above what should be a resistance level now in order to hit your stop loss. Take profit could be at today's low, okay, down here. So today's low was down around 22,000 even, okay? So if I go take profit without having to break today's low, okay, I'm looking at almost 3-to-1 ratio, about 3-to-1 potential profit to loss with this setup, okay? Possible profit, possible loss. Now I can change my trade size to be the amount of risk I'm comfortable with. So I switched it to one lot. Now I'm risking about 550, which is a little more than 1% of my account. So maybe, and you can trade whatever percent of the account you want. I usually try and stick around 1%, but you could trade more, you could trade less, 0.9, and the market's moving. So I'm it's going in the right direction. So I'm getting further from my stop loss. Okay, now that's less than 1% risk, 450 on the balance I have, going after 3 times as that, even more than 3 times that in profit, okay? I just spiked up a little, so it gave us a little better entry point. So I've got my stop loss above this resistance, up here, back above that broken support, and the take profit before today's low. Okay, risk managed, about 1% risk on the account. It ended up around 495, which is less than 1% of my balance here. You could risk 0.5%, you could risk 2%, whatever you're comfortable with per trade, but at least you should know. You should have a plan, and our order window helps you do that to manage your risk as you open each trade, to know how much you're risking. If you want to watch the live trade, then you go here to the open positions, and I can take a look at the chart and see exactly where my stop loss is, where my take profit is on these charts. Okay, and just go to full screen on the chart. I was trying to drag it up, but it's easier just to use the arrows. Okay, so now maybe I want to zoom in on this because I want to see a little closer on my entry and exit. So here's my stop loss up here, okay, above that broken support. Here's the current price, and here's my take profit down here. And I can drag these all I want, okay? I had like better than 3-to-1 ratio. Maybe I see this climbing and I say, you know what? It might temporarily break above before dropping. Maybe I'm willing to risk a little bit more, and I decide, you know what, I'll drag my stop loss up so that I'm above these high points here. So it would have to break above these high points in order to hit my stop loss. So I'm willing to risk a little bit more to secure my stop loss a little bit maybe. So you can do this at any time. You can come back and you don't have to manually type in the new stop loss price. You can left click and drag and get, as you look at the candle formations, get your stop loss where you want it. And now I'm clearly above this resistance here, where it had trouble climbing above and dropped, trouble climbing above and dropped. So I'm not just above this resistance level here that formed today, but now I'm above this resistance level that formed earlier on. Okay, so this is the way that you can use the technicals as you look at them to maybe adjust where you had your stop loss a little bit or your take profit. I still like the take profit location because it's just above today's low. Doesn't have to break that low to hit my take profit. So then I might think, okay, I'm comfortable here and leave it sit. Okay, but that's there for you even after you open the trade to play around with the risk management a little bit if you see fit. Now, maybe I'll pause for a moment. Any questions on what we went over there, the decision making with that DAX trade? And we easily could be looking at Euro USD, highly affected by the news as well. Obviously, the European currency and the US currency paired together, you're going to see a lot of volatility and a lot of movement. Okay, looks like there's a little glitch. If you're trying to search the asset from within this area in the chart, it's working better if I go to the top corner, top left up here. Okay, now we've got the correct chart. And what we could do before we look at the chart is see, is there a signal here? And there is a signal on Euro USD. So what's the most recent signal? We see the Euro just shooting up against the US dollar. And it's interesting that's the case because there's a lot of fear maybe about the tariffs in the EU. But at the same time, there's fear in the US about it as well. So this was a buy signal and it already came to fruition and hit the take profit. So as you come in and you take a look at the technicals of the signal, you see that this was a tremendous signal, already blew through both take profit levels. And it seems that these tariffs are actually a situation where it's causing the USD to weaken a bit and the euro to strengthen in response. So it's interesting to see that response. The fear response, a lot of times the USD strengthens with fear. But in this case, because it's fear about tariffs and what effect that might have, not just on the European economy, but on the US economy, currently we see a strengthening of the euro against the USD. So it's an interesting situation, but we already see the take profit hit on this. So maybe we'll move to a different instrument. We can take a look at gold. And let's look at the signal on gold. It was a sell signal, which did not come to fruition yet. It tried to. It came down, but didn't quite hit. And you think about the fact the USD seems to be weakening against the euro. So maybe that's why the gold signal didn't turn out with the sell. Okay, so it almost feels like there's couple reasons for gold to potentially go back up toward its all-time highs. There's fear about the tariffs. There's selling on the equities as of the last couple of days, breaking support levels. So when people sell out of the stocks, out of the equities, where do they go? And if they're not going to the US dollar, because we see it's weakening rapidly against the euro right now, the US dollar is. So if the US dollar is weakening and folks are looking for safe havens, then it might make sense, fundamentally speaking, that gold as a fundamental reason maybe to go up. And so maybe you start to look at this support level here on the 2-hour candles, and you see it keeps hitting and bouncing again and again and again. And currently, as the euro is flying up against the USD, maybe that means gold could more easily go up against the USD. Okay, and so this technical signal looks like so far it's failed, Doesn't mean it won't go down, but fundamentally it feels like there's reason for gold to go up. So we start to look and say, okay, maybe buying on this could make sense. And if you were going to do that because of the fundamental news and the fear that the tariffs have brought, then we could look at stop loss below this support level, which would be maybe right here, 3,100 flat, maybe 30.99 to get below that round number of 3,100. So 3099. And then take profit could be before the all-time high up here, so maybe 3160 without having to go to a new all-time high. So not being greedy here, looking for a take profit before the all-time high, better than 2-to-1 potential profit to risk in the direction that maybe the fundamental news would push gold. We'll see. So we've got a risk managed trade here, and it looks like now we just need to adjust trade size to be the amount of risk that makes sense for you. So if I do a quarter of a lot, I'm risking less than 1% of my account, going after better than that more by a factor of 2. And so maybe that's the move that could make sense. Okay, from a fundamental perspective, trying to trust the support level here. Now, other things we could look at are what news is coming out today, tomorrow. There's really big news besides the tariff news. And we can take a look at what's on the economic calendar. And really, it's some really important news coming soon. So what's already come in is some mixed data out of the European Union showing higher than expected PPI and lower than expected PPI data, kind of a mixed bag there. So nothing major. In general, it looks like maybe inflation is slowing down a bit in the European Union, but unemployment rate ticked up a bit, okay, this week already. So if we go to today's date, and we take a look at the nearest high-level announcements, they would be out of the US now. And we're looking at initial jobless claims coming in just a couple hours' time. And so if we take a look at how has this moved the market in the past. And so this tool, if you haven't used it before, it's in the Market Buzz, economic calendar, and then find the high-level announcements for the countries that you choose, that you would like to look at, and use this volatility tool to look at how has it affected the movements on different currencies. So if we look at Euro USD, different time frames after the past announcements for initial jobless claims, and we say, what if this comes in above forecast, meaning worse than expected news? Okay, if it's higher jobless claims than expected, okay, initial jobless claims, that would be bad news if it's above forecast. What has happened in the past? 75% of the time, the euro has climbed against the US dollar. Okay, so we could be waiting on this announcement to come in, and if indeed they are worse than expected, then the USD tends to weaken against the euro. Makes sense. And if we look in the first 5 minutes, same thing, 75% of the time up, but only about 7.5 pips in the first 5 minutes. And after 4 hours, the average range movement is 48 pips. Okay, so you have time to get those trades off. What if it comes in below forecast? Better than expected news. Not as good of a percentage, 63% to 38%, and really it's only 1 away from being 50-50. 5 up, 3 down. So I'm not looking to trade on that. If this comes in below forecast, the percentages aren't as strong, but if it comes in above forecast, 75% or better, that sounds pretty good from the past statistics. So you might be prepared if this comes in above forecast to trade based on the past statistics for this announcement. Now, we also could look at, there's an announcement out of Canada, balance of trade. And if we pair the Canadian, maybe not against the USD, but against the yen, because there's a US announcement at the same time, if this comes in above forecast, 71% of the time, the yen pulled the Canadian down, but not much. Okay, in terms of 1, 2, 3, 4 times it barely went down, and once it went down larger. And 2 times it went up, but much larger than the ones that went down. So the percentages are down more than up, but the size, average rise is much larger than the average drop. So that's a mixed bag there. The percentage looks nice, but the movements don't look as nice. So I would probably sit this one out on Canadian JPY. If I do Canadian USD maybe, or Euro Canadian, perhaps I get a better look. That one looks nicer. So USD Canadian, if this is above forecast, the Canadian pulls the USD down 71% of the time, and these look much larger now. And the ones that went up were not larger than the ones that went down. And it went down more often. So even though we've got US announcements at the same time, it looks like this pairing gives a better look in the end. So this is something you could look for if this comes in above forecast. The statistics show that you get nice movements down more often than up on the USD Canadian after 4 hours. And in the first 5 minutes, the opposite. Okay, a lot of upward movement in the first 5 minutes, so you have time to get your trade off to sell. And after 4 hours, the statistics show majority of those you'd have a nice profit with a large number of pip movement, over 51 pip range movement. Okay, so you can have a whole trading plan for timing in the first 5 minutes. If this spikes up, I'll sell only if this comes in above forecast. Okay, just an example of how you can use this tool to qualify what announcements you'll trade on, and only if it comes in a certain direction that makes sense for you to trade. Okay, so the big announcements though are tomorrow. The biggest ones, I should say. Not that those aren't big, you can trade on those. But the non-farm payroll comes in tomorrow out of the US, which is the largest announcement each month for the US economy typically. So non-farm payrolls, expected that the jobs numbers are going to decline, and that's really anemic job growth if that's the case. If there's only 80,000 jobs created or less, wow, that's bad news for the US economy. So if we come in here and take a look at the non-farm payrolls and say if this comes in below expectation, what has happened in the past? It's not statistically solid enough for me to make a trade off of this. You get large movement, 70 pips, but unpredictable directionality. Okay, what if this comes in above forecast? Now we've got predictability. So you see a vast difference between if this comes in good news, above the predicted number for non-farm payroll jobs created, huge predictability, 86%, almost 100%, 6 out of 7 times, US dollar pulls the euro down if the jobs numbers are better than expected over the 4 hours after the event, and we're talking an average range movement of over 65 pips. Okay, and the one that went up, look, it just barely went up. So really, all the movement was down, except for a few pips climb on 1 out of the 7 when the data comes in better than expected. Okay, and what about the first 5 minutes? Look at that, half of them are up, and the ones that went down are not down the full distance. So you could be looking for these ones that spiked up, and it doesn't take 5 minutes to place a trade. In the first 30 seconds, you could see if you like the entry point, and or wait for a minute or two to see if these come up, assuming that the data came in above forecast, to get a nice entry point up here. And then after 4 hours, look what happened. Okay, these are huge advantages to see these statistics from the past. You're not going to see 100% accuracy with this, meaning just because in the past it went down the majority of the time doesn't mean this time it will. But this is what we call data-driven trading off of fundamental news. Okay, and it's not about thinking you're going to win 100% of the time. It's about wanting to win more often than you lose. Okay, and if you can have this kind of result, winning with these types of percentages, then you're doing very, very well. Okay, even if you're winning 60% of the time, you're doing very well. Okay, I'll pause for a moment. Any questions, comments on using this tool? Okay, great. I must have been clear. I don't see any questions popping up. Just peeking at some of those trades that we started. They're still trying to get moving. I think this is a good spot to stop. We've got some announcements coming up soon. And, you know, we've covered the largest fundamental factors that are going on right now. Huge announcements out of the US tomorrow. A couple decent announcements today that could be tradable as well. The big headline being the tariffs. Those two things are really driving and moving the markets right now. So I would keep an eye on those factors in the headlines and watch the technical trends to see if they look opportunistic for the direction that you think that set of fundamental news will move things. All right, everybody, thank you for joining. Good luck with your trading the rest of the day and the rest of the week. Bye for now.